Hey everyone, welcome back to Corporate Decoder, the place where we dive into the financial secrets that shape our world. And today we might just uncover a hidden treasure or a cautionary tale in this latest filing from Invesco Mortgage Capital Incorporated. Okay, so Invesco Mortgage Capital, IVR, as you might see them listed on the stock exchange, has put out some news. It's not a full quarterly report, but more like a snapshot, a heads up on what's been going on as of the 31st of January 2026. Think of it as a company checkup, giving us a glimpse into their financial health before the big official report card comes out, and it's always interesting to see what companies choose to highlight outside of the usual reporting schedule, right? It can tell us a lot about what they want us to focus on. Make sure you're subscribed to the channel and join our Discord community linked in the description below, where we break down these reports even further and discuss them with other finance fans. Now, Invesco Mortgage Capital deals with a couple of main things. They have their regular common stock, which is what most everyday investors own. But they also have this other type of stock called preferred stock, and they highlight their series C Cumulative Redeemable Preferred Stock. This is like a special kind of stock that comes with set dividend payments, a bit like a bond, but it's still stock. The name itself is a mouthful, isn't it? Fixed to floating means the interest rate on these dividends can change, moving from a fixed rate to a floating rate based on market conditions. Redeemable means the company can choose to buy this stock back from investors at a certain price. It is important to know these different types of stock exist because they function differently and have different implications for the company and its investors. So what they've given us here is a press release dated the 13th of February 2026 talking about their situation just a little while earlier. On the 31st of January 2026, they're sharing some initial financial information. This is pretty standard practice for companies to keep investors informed, especially when there might be significant shifts or when they want to provide updates between official earnings announcements. And the press release is packed with information. They're talking about their monthly dividend for common stockholders, which is always a big point of interest. Dividends are basically a share of the company's profits that are paid out to shareholders. Then we get into some really meaty financial terms. Book value, their total investment portfolio, how much cash they have on hand, which is liquidity, their repurchase agreements, and how much debt they're using, which is leverage. These are all crucial indicators of a company's financial health and its strategy. Let's break down some of these key aspects. Book value, in simple terms, is what the company is worth if you were to sell all its assets and pay off all its debts. A rising book value is generally a good sign, suggesting the company is growing in underlying worth. Their investment portfolio is essentially all the assets the company owns that are meant to generate income. Think of it as their collection of investments. Liquidity is super important. It's like a company's emergency fund, showing how easily it can pay its short-term bills. High liquidity means they are in a strong position to handle unexpected expenses or tough times. Repurchase agreements, often called repos, are a way for companies, especially financial ones, to borrow money for very short periods, usually overnight, using their investments as collateral. And leverage, well, that's just a fancy word for using borrowed money to try and increase the potential return on an investment. Too much leverage can be a double-edged sword, amplifying gains but also magnifying losses. This document, Exhibit 99.1, is the actual press release. And while I can't show you the specific numbers from that press release here because this filing is just referencing it, the information it contains is what they're choosing to highlight. They're emphasizing these key financial metrics as of the 31st of January 2026. We're not getting the full income statement or balance sheet here, but these are usually the pieces that management wants to put front and center, perhaps because they are particularly good, or maybe they are trying to address concerns investors might have. Now, looking at this from a Warren Buffett kind of perspective, we want to see a clear story. Is the company growing its intrinsic value? Is it managing its risks effectively? Are its investments sound? The mention of a monthly dividend for common stock is a positive signal indicating profitability and a commitment to returning value to shareholders. However, the details on book value, portfolio size, liquidity, and leverage are where the real story lies. If book value is increasing and their investment portfolio is growing and performing well, that's a strong positive. On the other hand, if liquidity seems tight or leverage is very high, that could point to potential vulnerabilities. Think about it this way: if a company's book value is like the foundation of a house, you want that foundation to be solid and getting stronger. If their investment portfolio is like their income generating properties, you want to see those properties well maintained and bringing in good rent. Liquidity is like having enough cash in the bank to cover unexpected home repairs, and leverage is like taking out a mortgage to buy more properties. It can be smart, but too much and you are stretched too thin. What is particularly interesting is the timing of this release. They are sharing preliminary data. This is usually a sign that they want to get this information out quickly. Perhaps they are responding to market conditions or addressing investor questions about their performance in the last month of the year. The fact that they are highlighting their series, See Cumulative Redeemable Preferred Stock, also signals that this class of stock is a significant part of their capital structure. From an outsider's perspective, the success of a company like Invesco Mortgage Capital Inc. hinges on how well it manages its investments and its risk. The real estate and mortgage-backed securities market can be quite volatile, so strong liquidity and prudent leverage are paramount. If their portfolio is performing well and they maintain healthy liquidity, it suggests they are navigating these markets effectively. If they are seeing a decline in book value, or if their leverage levels are too high relative to their equity, that could be a red flag, suggesting they might be taking on too much risk or that their investments are not performing as well as expected. So to sum up, this filing isn't a full financial report, but a timely update. It's a company providing a peek behind the curtain, focusing on what they consider to be the most important indicators of their financial health as of late January 2026. They are signaling their dividend plans and giving us a snapshot of their balance sheet strength and investment strategy. These are the kinds of updates that can give us early clues about how the full quarterly report might read. Alright, let's talk about what this all means. Invesco Mortgage Capital Inc. seems to be keeping a close eye on its financial standing, and they are being proactive in sharing certain metrics. The focus on book value, portfolio performance, and liquidity suggests a company that understands the importance of a strong underlying foundation and the ability to weather market storms. Their use of leverage will always be a key area to watch, as it amplifies both returns and risks. While the preliminary data doesn't give us the whole picture, the emphasis on these specific areas indicates where management believes the company's strengths and potential vulnerabilities lie. For investors, this is a signal to dig deeper when the full financials are released, and to pay close attention to trends in these highlighted metrics. What is your take on these financial snapshots? Do you think Invesco Mortgage Capital Inc. is steering the ship in the right direction? Let me know your thoughts in the comments below. If you found this breakdown useful, a like would be fantastic, and subscribing ensures you don't miss our future analyses. Also, join us on Discord, the link is in the description, for more in-depth conversation. Thanks for watching, and we'll see you in the next Decode.